keep it?
No, for bar for tonight.
This is between these two questions. Thanks.
Larry said
Absolutely.
that's what he said.
Good evening. We'll call to order the budget workshop meeting for Thursday, October 15, 2015. At this time, I'd like to turn it over to Township Manager Michael Lefevre.
Thank you, President Luker. Good evening, Commissioners. The good news, our presentation this evening will be relatively brief. The bad news, we have a funding deficit of over $1.1 million that still needs to be addressed. The information we're going to provide you this evening is basically a summary of the budget message and budget material you provided last week. That same information was provided to the public. We did post the entire budget on our website to provide the public the opportunity to offer input as we go through this process. Okay. Our three budgets next year, as it presently stands, there it is. The general fund budget is increasing approximately 3%, and we hope to decrease the level of increase somewhat over the next few weeks. Our sewer fund has a 2.4% increase, and the refuse fund approximately 1% increase. The proposed budget, as being presented this evening, does not provide for any increase in our sewer rate or in our refuse fee. It will be maintained at the current levels. The general fund millage rate is yet to be determined. For the average household, the amount of money they pay for real estate taxes is distributed between school tax, county tax, and township tax. The township portion of the real estate millage is less than 11%, the county 8.5%, and the bulk of the millage is paid to the school district at approximately 81%. And those percentiles haven't really changed other than there's been a slow growth in the school district's portion of the millage and a corresponding slight decrease in the township and county, approximately a 0.25% decrease, it seems, on an annual year in the township and the county, and a corresponding increase in the school district portion. The breakdown of our revenues, primarily our main revenue sources continue to be real estate taxes at 30%, followed by business taxes and earned income tax, each slightly over 20%. But those three items encompass more than 7% of our income for our general fund budget. The expenses for next year, as you can see, are higher than the projected revenue at $37,770,414. The bulk of the budget is police-related. If you take the pension costs and divide the police portion of those costs to the police budget, it encompasses approximately half of our general fund budget. Followed by that is our public works, parks, and library.
I'm sorry, Michael. Was that so? Is the police pension portion in the police section?
No, the police pension portion is in the pension.
Okay.
So you broke out their component and add to the 46.7%. It would bring it pretty close to 50% of our budget.
Thanks.
So we just need to get rid of the police department.
I'm sorry.
We just need to get rid of the police department.
Michael, could you explain what debt service represents, the 5.10%?
Debt service is basically our outstanding debt for bond issues, the bond issues that are out there. We're fortunate that we don't have a lot of debt service, and it's relatively short in term. Within about a 7-year span, we'll have all our debt service paid off, so it's a question of managing that service going forward. But we're in a relatively strong position regarding debt service. Our borrowing base, the amount of money we can borrow, is much higher than that we currently have taken advantage of.
Is there a rule of thumb on the percentage of debt service to the general fund, to the overall expenses?
There isn't. There's limits on how much you can borrow based on your taxing ability, but we're nowhere near those limits.
And do you have an idea what that percentage would be in our budget?
Not off the top of my head, no. I could get that information for you.
Thank you.
Any other questions up to this point? Okay, continue, sir.
There are some positive areas on our revenue in comparison to the current year. You can see mercantile tax and earned income tax are projected to increase $100,000 each. Our state pension aids increased by $32,000. and there's been approximately the same increase in our franchise fees from Comcast and Verizon, $25,000 increase in business privilege tax and a refund category, and also a slight increase in our state snow reimbursement. The expense comparison for the current year, as you can see, it's being driven by personnel costs. As previously stated in prior budgets, personnel represent about 76% of our operational expenses in the general fund budget. So it's not surprising that the major increases in our expense categories are directly tied to personnel. Of those 9 areas that were showing increases, 6 of them are personnel related. The ones that aren't contracted services, equipment and maintenance, and interdepartmental allocations. On the positive side, our pension costs have gone down, $275,000, and that was driven by a decrease in our non-uniform pension of $357,000. There was a slight increase in our police pension costs of about $81,000 or $82,000 for next year. But the net result is a $275,000 decrease. There's also a slight decrease in our projected costs for gasoline. Obviously, we all enjoy the decreased gasoline costs, and a decrease in our electric and part-time wages. We use the same comparisons every year on a budget, basically comparing ourselves with other municipalities in the eastern part of the county. And we basically have maintained the same position. And actually, of the list of municipalities there, everyone has stayed in the same ranking except for the bottom 2. Hepburn and Cheltenham changed positions this year. But other than that, the ranking has remained the same, with Abington basically dead center at 3.9711 mils.
Now, are the millages evened out here? Because I know some of these municipalities still have their refuse and or sewer involved in the, or still in the millage, or are these just pure property tax?
I haven't separated refuse or sewer if it's included in there. So if sewer and refuse is included in the millage, it's reflected in these numbers. We can go back and look at those and see if we can provide additional detail.
And the 3.97 for Abington is just is not including sewer and refuse.
That's correct.
Because I thought I remember we talked about that before. I mean, it'd be interesting to know which of these are pure just general fund millage.
We can have that for you for our next budget meeting. Not a problem at all.
Michael, before we get off that slide, first of all, I concur with Stephen that it would be helpful to see normed numbers. Now, this is something, this is kind of just off the top of my head thing, but do we know, or is it at all convenient to find out for sometime in the next couple of weeks, what the trend has been in all of our standard comparable municipalities as far as their recent trends as far as millage, like which ones over the last 2-3 years have raised property taxes and which ones have kept steady? I don't know if that's hard to compile.
It shouldn't be that hard because we have the prior year numbers. I know for 2015, of the top of the municipalities listed above Abington, I believe Lower Merion was the only one that increased taxes this year and brought them much closer to us. There were a number of municipalities below us that increased taxes in 2015. Not all of them, but a number of them did. But of the lower millage municipalities, only Lower Merion raised taxes this year. But we can get you that for the next couple of years. It's not a problem. We have that information. This is a new comparison I added. And when preparing the budget message, I indicated, I point back to 1997 when the county reassessed the tax base for all the municipalities in the county, and there hasn't been a change since that time. So I did a calculation on what our average millage increase has been over that period of time, and it basically comes to 1.1% a year, which is obviously a very low number. But I just thought to myself, how does that compare with the rate of inflation? So we looked at the CPI for the Philadelphia region, Philadelphia, Delaware, Maryland region, for that same period, basically using all the items included in the CPI for that region, and it averages in that period 2.5%. So the Board of Commissioners, this board and prior boards, needs to be commended on doing a very good job in managing our real estate millage over the last 17 years. We're less than half the rate of inflation. During the same time period, with 1/3 of your revenue, your tax base has remained basically stagnant. So it's a very positive trend and needs to be recognized.
Excuse me, Michael, you said you did this for the first time?
This year, yes.
Right, thank you, that's good.
We, every year as part of the budget presentation, we look at our fund balance, and there was a major change in our fund balance policy as part of the preparation for the 2015 budget. You may recall prior to that, our fund balance policy required that we retain a certain percentage of revenue each calendar year as a minimum fund balance, and there was no maximum fund balance provided for. As a result, we accumulated excess assets that everyone tended to look at and point to anytime any type of financial issue came up. It was always, take it from fund balance, let's go to fund balance. The budget was no exception, and years ago, the board started a policy of taking money out of fund balance to balance the budget, and initially it was about $300,000, and over a relatively short period of time, that grew to over $3 million. Fortunately, the township was bailed out when we enacted the earned income tax, and we took advantage of that opportunity. And it took the dependence on the fund balance away from the township. But 4 years ago, we went back to fund balance to balance the budget. In 2013, I think it was $350,000. That increased to, I think, $870,000 in 14 and $522,000 this year. Under the new fund balance policy, we provide for a minimum amount of expenditures, of 1 month expenditures, and a maximum level of 3 month expenditures, with any excess money being transferred to our capital needs and our post-retirement health care obligations. We knew, as part of the preparation of the 2015 budget, it would present problems in 2016 because of our deficit, our $1.1 million deficit, over 45% of that deficit represents the loss of the fund balance proceeds that are included in this year's budget, approximately $522,000. We don't have that money this year, so that accounts for a large portion of our deficit. But I think long-term, it makes much more sense for the township. We're addressing our long-term, our short-term capital needs, our long-term health care obligation, and it was obviously the right decision. But it just was going to be problematic for this year, and we have some issues we need to address. But you need to be aware of that.
Michael, if I'm reading this correctly, so as it stands today, we currently have in excess of the 3 month maximum $694,000.
That's correct. That was as of 1/1 this year. Now, according to our fund balance policy, that money should be transferred
Proportionally to OPEB and Permanent Improvement Fund,
and a small portion to utilize for the next year's budget.
Do we have a sense of what that number is going to be as we close out this current year?
No, we do not.
We don't.
Which would apply to actually next year.
Right.
Yeah.
Right.
But we have this money to utilize this year.
Yep. Okay. Thanks.
Our post-health care obligations remain relatively the same. Those costs, those expenses are priced out every 2 years, January 1st of each even number year. So 1/1/16 will obtain a new cost valuation. We expect that number to stabilize. You can see it jumped up dramatically from 2010 to 2014, primarily because we kept adding new employees for our roles and picking up additional costs associated with those employees. We stopped at the end of 2014 providing post-care health care retirement benefits to salary and clerical employees. And at the end of 2015, we're going to stop that benefit for our per diem employees. Our police department contract is currently under negotiations and needs to be addressed, but we definitely have slowed down the addition of new employees to those roles, and that combined with the additional $2 million we contribute to our OPEB obligation should see a stabilization of the present value of those benefits, if not a decrease. We expect definitely a decrease in the unfunded liability portion.
But that's not reflected right there, right?
No,
Because
it
that
will
was
not be
the
reflected
15
until 1/1/16 numbers are obtained. Okay. Prior to going on to our sewer and our refuse budget, just going to summarize where we currently are. With expenses at $37.7 million, projected revenues $36.6 million, over $1.1 million deficit or funding obligation we need to address. One of the areas we haven't been able to sufficiently address is our health care benefits, which are a major portion of our budget. We don't have final 2016 numbers. We expect to have those numbers in the next 2 weeks. And initially, we're optimistic that we'll have favorable rates and we'll be able to decrease the obligation. So that'll offset a portion of that $1.1 million deficit. We're also going to revisit the different department budgets with their difference from the current year levels regarding personnel and specific project funding requests. So while we think we can reduce the deficit, I don't want to imply or represent that we're going to erase it by any stretch of the imagination, but I think it's going to be a more palatable number. To close that current deficit through a tax increase will cost approximately $51 for the average household, assessed at $150,000. And I know that it's not a suitable number, acceptable number to the Board of Commissioners. It's not a number the staff's comfortable recommending. So we're going to, over the next couple of months, revisit these numbers and see if we come in November 10th, I think it's November 10th, with our next budget meeting, with a more palatable recommendation. Over the next couple of months, Finance Department and I are happy to meet with each commissioner individually, collectively, any way you hope to approach it, a phone call, whatever you like, offer any suggestions you might feel appropriate, and we'll certainly take those suggestions into consideration. By posting the budget on the website, we hope to also receive input from the public at the same time. I referenced before our sewer budget for next year does not provide for a tax increase. The budget's up approximately 2% next year, but you see it's relatively stable over the last 6 or 7 years. And our actual sewer rate has been stable for 5 consecutive years. So we're very pleased that those numbers have worked very well. You may notice that the number down below, the $279 for the average household, Mr. really revisited what the actual average household was paying, because a number of households that called and complained and said, why am I paying more than $279 if that's the average bill? The bill's tied directly to your water consumption. So Mr. really looked at the properties that were being utilized to come up with that number and took out vacant parcels, apartment units, and basically just looked at single-family homes, residential homes. And it probably a more realistic number for the average household was $302. We're not changing our rate, but probably that's a better number to use for comparison purposes.
So if the budget shortfall is about $200,000, how are we maintaining the sewer rate?
Additional revenue is offsetting that additional increase. It's increasing over $200,000, but it has revenue to offset those costs.
Revenue from
Payment to others.
from what?
Payment from other townships for the sewer to go through this township has gone up over the years, and that has covered the shortage in the sewer rates.
Jeremy, could you put the microphone on? Could you repeat that answer?
So basically, the payment from others, which is from other townships to pay for the sewer that goes through Abington Township's treatment plant, that has gone up over the last couple of years, so that's covering the shortage for the sewer rents.
And is that an anticipated reoccurring value?
Yes.
Okay, so we're not.
That is billed based on our expense in the wastewater treatment plant.
Right.
So at the end of the year, the wastewater treatment plant puts the total expense together and then bills the department, the other department, for the previous year. So that is based on our current rates. So.
Right. Thank you.
We have a cushion there. We have retained earnings in the
Yes,
sewer.
we do.
If that,
In both our sewer and refuse budgets, there are retained earnings. Moving on to refuse, this is a comparison of rates over the last 9 years. And you can see, looking back to 2007, the majority of households are paying approximately the same or less than what they were paying 9 years ago for refuse fees. For the large container, it's slightly higher than what it was in 2007, but for the medium and small containers, it's less than the rate that those houses were paying 9 years ago. So Mr. Michelot needs to be recognized for the great job he did by transitioning to the automated collection. I know everyone had doubts when it was first introduced, but it was definitely a winner. It's worked very well. Looking at our rates for next year, they're going to remain the same, which is pretty remarkable. Just because the budget is relatively even, but one of the areas that were being hurt in 2016 is our recycling revenue. Recycling has always generated a positive cash flow to the township, but our commingled recyclables will now cost us to dispose of. There'll actually be a fee associated with every ton of that recycled material we collect and dispose of. It's certainly less than the tipping fee if that same material would go in the trash stream, but it's still going to be a cost item. Mixed paper is still positive cash flow. It still generates revenue. So I think Mr. Michelot was smart not recommending we go to single stream and combined paper and commingled, because we'd be paying to dispose of all of it. We're actually receiving cash flow on the paper. So that perception, that hunch worked out well. So that should be recognized as well. So right now, we're 1.1 million in the hole. We have a capital budget workshop next week and a preliminary budget meeting on November 10th. We'd appreciate any insight or any input you might provide over the next couple of weeks. We're optimistic we provide a more palatable budget to the board on November 10th, but it's still, I suspect, still probably will contain some type of recommendation for a small millage increase. Happy to entertain any questions you might have at this time. Before I start, I need to recognize the effort Kevin Barron and Jeanette Herman have done on the budget this year. I know we relied heavily on Susan and Kevin in the past, but now Kevin and Jeanette have worked very well. The transition has been seamless, and they've done a great job on putting this together.
Thank you. This is Kevin and Jeanette's first solo
Yes, it is.
budget. Thank you. Good job.
And Kevin's done a much better job with the clicker than Susan did in the past, and you recognize that as well.
All right, open to any questions by the commissioners. Commissioner Spiegelman.
Just for a little historical perspective, the earned income tax was enacted in 2003 for the 2004 budget. Am I correct about that?
That is correct. It was, well, no, it was not correct. It was enacted for the first year, 6 months, last 6 months. So it was effective July 1st of 2003. Okay. Our first year of full was 2004.
2004. And that rate has I know obviously that is split between the school district and the township. That rate has remained constant the entire time. Just for the benefit of folks watching, what is the township's wiggle room, township or the school district's ability to make adjustments to the earned income tax?
To make adjustments to the earned income tax, you have to be a financially strapped township. So you would have to prove that the township needed to raise the rate of the earned income tax to raise that higher. So we are not in that boat right now.
And let's hope.
And hopefully we never get to that situation.
That's a bad boat. That boat always sinks. Nobody wants
Higher than the legislated, what is it, 0.5% or something that we get?
Correct.
0.5% per.
Commissioner Sanchez.
Thank you. Gentlemen, can you remind me what the, and I'm on the expense comparison slide, which is 7, the interdepartmental allocation, what that, I forget from last year, and why that would spike too.
In the interdepartment allocation, there's expenses that are charged into one line item. For example, workers' comp. Another one's vehicle maintenance. So vehicle maintenance is charged in a vehicle maintenance budget, but vehicle maintenance is really a chargeback that goes back to every department. So in the interdepartment allocation, there's a mixture in the budget book. And I'll just go over a few to tell you what, they are, is, the computer time gets charged back to all departments. Any debt services for a certain department gets charged back to there. Workers' comp, finance, tax, vehicle maintenance, and administration. So if you look at the budget, the finance budget's a zero budget, tax budget's a zero budget, and vehicle maintenance. So that's charged back based on vehicle maintenance on the vehicles, how many vehicles the department have. It's kind of everyone says it's a different way of doing it. You could charge by the gasoline, but we'd have to keep track of the gasoline charges or the miles on the car. So workers' comp is based on a 10-year charge of claims that are done through each department. The company gives us the claims that, were paid out through the last 10 years, and I average that back and charge it back to the department. So it's a unique thing to do, and it's not an easy thing to.
So what drives the increase there, though? Is it like an organic thing, like for example, workers' comp?
Workers' comp, last year we went at the end of 2014, we went to insured version of workers' comp instead of self-insured. That claim went up a little bit. So in 2015, we didn't we transferred money from the general fund and from the sewer fund, the refuse fund to cover the workers' comp fund. But there's money sitting in the workers' comp fund for all these years. We were self-insured. And by the state law, we cannot get rid of that excess funds yet until we close all the self-insured claims out, which could be 5 years, 10 years, 15 years. We don't know that till all the self-insured claims are out there. So we didn't cover the full expense last year for this year, and I covered more this year, or 16 instead of 15. So that's why the workers' comp chargeback went up. If you looked at all the departments, the workers' comp chargeback went up from $385,000 from the general fund to $450,000. So that got broken out to all the departments.
So why is there a workman's comp and an interdepartmental connect?
Well, the interdepartment is the chart, so we take one line item, we do, in administration expenses, a $450,000 transfer to workers' comp to cover the claims. So that has to be charged into each department by the claims of the last 10 years. So then that interdepartment allocation, if you looked in that budget, would show a negative $450 going charged out to each department.
And then the workman's comp expense part of this, which is the $65,000, is just for the insurance. Because you have two line items under the expenses comparison. You have one for interdepartmental allocation. You said that had workman's comp being allocated to each department?
Correct. Well, the interdepartment allocation went up by 125, and the chargeback workers' comp expense went up by 65. So that would be in there, not twice, but overall included in there.
Okay, so for the sake of this chart, the interdepartmental comp allocation does not have the workman's comp increase in it, because that's the $65,000. Is that what I'm reading?
It does have it in there. It would be in both.
Okay.
So expense went up on one side and chargebacks hitting the departments throughout.
Okay. Sorry, Commissioner Sanchez.
Thank you.
Any other questions?
No, but I have a suggestion.
Okay.
You mentioned that you had posted the link to the budget on the township website. It might be worthwhile posting the link to the website on the Facebook page as well, because I think you get a lot of traffic on the Facebook page.
Absolutely.
Thank you. We'll be happy to take care of that.
Thanks.
So we're 9 months into the 2015 budget. Do you have any idea where we are with expenses to revenue in a comparison to previous years, and where you might head with
Yes.
potentially adding?
I'll present
or
that
subtracting
Tuesday night to
from-
the Finance Committee.
What's that?
I'll be presenting that to the Finance Committee on Tuesday night, but I can go over things real quickly if you'd like.
Yeah, I think because most commissioners won't be
On the
there.
revenue side, right now, we are $1,001 over compared to last year at the end of September. In expenditures, we are approximately $1.2 million over in revenues compared to last year at this time. In expenditures, we are about $1.1 million over compared to last year, but that is wages and benefits that are included in there, so.
So snapshot at this point, we're about $100,000 in the
So the
black.
snapshot this year, we're about 100,000, 200,000 over.
Okay, any other questions? Any from staff? And any from the public? Name and address, please, and
Laura Lehman, 1431 Bryant Lane. So one of the things that I would ask if perhaps could be explained would be our millages 4 times more than Horsham, for instance. What do we have that Horsham doesn't have? What are the things? So Horsham is apparently covering basic services, or perhaps doesn't cover refuse, and maybe sewer isn't in there. But what do we have that's 4 times more than what Horsham has? That's one thing that I hope would be answered. Before, when we sent off our retiree from the finance department with great congratulations on a fine job, I'm trying to understand how we had that big hole that has to be filled, that $50 million hole, and why we didn't know about that, and how it got to be such a big hole that was for the employee benefits, the retirement health care and benefits. How did that happen? I did get some indication that we weren't required to report it earlier. So I think I can understand how you folks didn't see it, but I'm trying to understand how our finance department, highly praised, did not see that and alert you to it. So I'm hoping you might answer that. And the third question that I had was, in August, there was an audit report in the paper that was Greek to me, and I had planned to try and get some answers on that before I came to this meeting, but I didn't. It has a fund balance of $194 million, and I assume this is our assets, the township assets, that are $3.393 billion. But even if that were the assets, which I haven't figured out what it was yet, I didn't get a chance to ask that before, the $194 million fund balance is a confusion to me. So those were the three questions. I would hope that perhaps you could answer those three for me.
Okay. Thank you for your time. Thank you.
Okay.
We can briefly respond to a couple of
You
those
want to do it
items.
now, Township Manager?
Yeah, in regard to Horsham, without having their budget in front of us, we can't make an accurate comparison, but Horsham's in an enviable position that they have a large employment base for near an income tax for all the industrial park and all the businesses there, and there's steady growth each year in their budget. So there's still growth within the community in terms of additional assessment and additional housing going up. So their tax base increases, their income tax increases each year. So they're able to maintain that level, one millage tax level for as far as I can look back. I mean, it's been one mills forever, and they're in an enviable position. On the other hand, our tax base is stagnant. Our assessment is not growing. We're almost fully developed, so you don't have additional assessments coming on board, so we don't have the benefit of that. We do have some growth in our own income tax. In an earlier slide, we showed $100,000, but $100,000 is a small amount in comparison to, 1.3 to 1.5 million increase in expenditures. So, Horsham has some benefits in their budget we don't currently enjoy. There's some other municipalities in the western part of the county that also have the advantage of increased new developments, new housing developments coming on board, and the growth in their tax base. In regard to OPEB,
Not to mention that Horsham's also going to, at some point in the next
Naval Air
5-6 years, are going to reap the benefits of the transfer of the Navy base.
exactly. Probably a little longer, might be 10 years, but exactly.
Being optimistic.
Yes. In regard to post-retirement health benefits, we're not unusual. Basically, all employers in private and public sector paid their employee post-retirement health benefits on a pay-as-you-go basis. You paid each year as you incurred those additional costs. Slowly, the number of employees that retired, the cost associated with that slowly grew over a period of time. It's almost like an inverted pyramid. But you paid the obligation each year, the additional increments. So your rate increase might have been 5%, but you picked up a couple additional percentage points attributable to the retirees. That's not unusual. It was done basically that way across the board. It's only recently, in the last 5-10 years, people began to recognize the long-term obligation associated with that. It wasn't until 2010 we were obligated to begin costing that benefit out, what it would be, and put a real number on that in the future. So once we recognized that, we brought it to the board's attention, this is something we need to address. Of anything threatening the long-term fiscal stability of the township is that post-retirement health care obligation. Now, the board's to be commended. We've taken dramatic steps in reducing that cost by stopping that benefit for 2/3 of our employees. So we've controlled the continued growth of that obligation, and we've also done much more than most municipalities in terms of funding. We have approximately $8.5 to $9 million in our OPEB account towards that obligation. Most municipalities have zero. They've just continued to ignore that obligation and pass it on for future generations. That's not the case here, and we are addressing it. As to the audit question, I had the same questions the speaker had on that $194 million, and I'll defer to Kevin and let him try to explain that in a minute or less.
Okay. When that audit is put in the paper, it's the audit of all the funds through the township. So the general fund is one fund, sewer fund, highway aid, health fund, workers' comp, refuse, sewer capital and sewer operation assets are shown in the fund balance. So your wastewater treatment plant, your pipes, your sewer, everything throughout the township is shown as part of your fund balance, if you want to say. And in M funds, it's called a different term. But so when you take that, it's the whole of all the funds throughout the township. So it is not $190 million fund balance. It's, you could say, $194 million worth of funding throughout that has different assets located, lobbed into that, which are your sewer treatment plant, your buildings, and stuff like that. So,
Thank you, Kevin. Any other questions from the public? All right, I'll go back to any commissioners who have any questions. And if there are no other questions, Manager Fleaver, did you want to summarize it briefly? And
No, I appreciate your attention and appreciate any input you might provide in the next couple of weeks, and I'm sure we'll be able to get to a number that's palatable to everyone involved.
so our next meeting is scheduled for a week from today,
Week from today, to go over our capital budget for next year.
and that'll be the 15th of October at 7 p.m.
No, 22nd.
Okay, I'm sorry. 20. Wait a minute,
Today is the 15th.
I'm sorry, right, 22nd. All right, are there any other questions? If not, I'll entertain a motion to adjourn.
So moved.
Thank you for your attendance. The meeting is adjourned.